but stopped from calling China a currency manipulator. The label is largely symbolic, but if the U.S. Treasury Department did say that China was manipulating its currency, it would require Washington to open discussions with Beijing on adjusting the yuan's value. Many U.S. lawmakers have accused China of deliberately undervaluing the yuan to gain a trade advantage. For more on the status of China's economy, I'm joined now by Leland Miller. He's president of the research firm CCTV International. Leland, let me get your thoughts on the economic data out this week. What caught your eye?
Well, I think the export data left just about everybody scratching their head. Who knows what to make of that? You know, it doesn't make much sense. January and February data are usually things that should be discounted or pushed aside. And so February to March data is usually not that important. But the numbers you're seeing, 90% increases to Hong Kong, it just doesn't make sense. So that certainly caught my eye.
Okay, what about the criticism that this week's trade data was inflated?
Well, I mean, I think it had to be. You know, a lot of the criticisms about Chinese data is about how the government manipulates things. This isn't probably a case of any type of government manipulation. This is firms either double invoicing or others trying to get funds out of China. So this is something that is very hard to detect. You can tell it's happening because you look at the Hong Kong data coming from the other direction. But the data is just it's too different to be accurate. So I think everyone's just sort of scratching their head on it.
Leland, let me ask you about, because Vivi Lin brought up this the issue of housing, the speculation in the housing industry. There's been a lot of talk. I just talked to an analyst the other day who says you can spot a housing bubble, you just can't spot when it's going to burst. What are your thoughts about the housing issue over there?
Well, China Beige Book has quite considerable amounts of data on the property sector. And we saw in Q1 real estate hot, but it wasn't hot everywhere. It was much hotter in the coastal areas, Beijing, Shanghai, Guangdong. It was so out west, and then it was cooling most other places. So you're seeing bubbles, and you're also seeing potentially popping bubbles elsewhere. So real estate's a real concern, but it's not standardized across the entire country.
How do you feel about the health of Chinese banks?
Well, I don't know anybody who really knows what's inside Chinese banks. You know, the claims are that non-performing loans are always under 1%. That's unlikely to be true. And there's certainly exposure to shadow banking, which is also unclear at this point. But right now, you know, the state has an interest in keeping a spread between lending and deposits so that banks remain relatively healthy. And so for the near term, they're somewhat protected by the state. And the fact that investors don't have true transparency on them is just another level of defense.
Let me get your preview on the first quarter data that's coming out on Monday. Where do you expect it to land? We heard Vivi saying that JP Morgan's saying somewhere around 8%. That would compare to 7.9% in the fourth quarter of last year. Do you think that's pretty accurate?
Well, if it is 7.9 or 8%, then the data is lagging, as we often see it happen with official data in China. Our first quarter results were very strong growth. We did not see this downturn that the official data saw in January and February. We saw very strong retail, services, real estate. And so if the data is only 8%, then it's probably lagging. I would expect it to surprise on the upside if it's reflecting the realities on the ground.
Leland Miller, live for us in New York. Thanks so much for your analysis.